in the past few weeks, digital assets have seen multiple rallies that have not stuck. We saw this yesterday morning when the crypto majors climbed after the November CPI report, but they then gave up those gains just a few hours later. Now, many investors are more defensive due to weak spots emerging in the economy, and traders have been cautious as the job market weakens and as concerns over AI valuations stick around. But while the CMC Crypto Fear and Greed Index is on fear, DeFi trends like stablecoins and tokenized RWAs are growing more popular. Well, joining me this morning to weigh in is Gerry O'Shea, Head of Global Market Insights at Hashdex Asset Management. Happy Friday, and thank you so much for joining me. So crypto prices do continue to struggle, but what is your take on the price action that we've seen in the final quarter of this year?
Yeah, well, certainly, and thanks for having me, Remy, but certainly Bitcoin came into 2025 with a roar, and here at the end of the year now we're kind of exiting in a bit of a whisper. And so that, from our perspective, is not concerning regarding the overall investment case for this asset class. But what we've seen over the course of the year is that at the start of the year, we had a lot of momentum behind the new administration, the pro crypto Congress. And but as the fourth quarter has played out in particular, we've seen some serious deleveraging. We've seen some long-term holders of Bitcoin sell their coins because they've been able to do that now with a much more liquid market and a much more favorable regulatory environment. So these are the types of things, along with uncertainty around the liquidity conditions in 2026, that we think are suppressing the price of Bitcoin and other digital assets.
And as we look ahead to the new year, Hashdex has released its investment outlook report. So give us your take on predictions when it comes to the growth of stablecoins as well as tokenized real-world assets and the AI crypto category.
Yeah, absolutely. And so the price depreciation that we've seen recently, we don't think is impacting the investment case for 2026. So some of the key themes that we're looking at that will involve both stablecoins and Bitcoin. I think there's a shift in the monetary global system that's really being driven by these two assets, Bitcoin and stablecoins. And with the passage of the Genius Act, that is really going to, I think, accelerate. So one of the predictions that we make in our outlook is that stablecoins will double in market cap from about 300 billion right now to about 600 billion this year as that growth takes place. And I think on top of that, also kind of building off of the legislative framework included in the Genius Act, is this idea of tokenization. And Larry Fink has recently said, we're not paying enough attention to how everything will be tokenized. And this is a market that some people are predicting could be 10, 15 trillion within 5 years. And from our perspective, we do see that there's going to be a lot of tokenization going on in financial markets. You have the kind of digital gold narrative around Bitcoin combined with the digital dollar narrative around the digital capital markets narrative that tokenization is really going to drive. So we're seeing that market as one that will accelerate significantly in 2026, and think there's going to be a lot of knock-on effects to that as well. And the final point that I'll make is with regard to AI. And AI and crypto are inextricably linked, in that AI is very dependent on kind of the decentralized infrastructure, the native internet nature that Bitcoin and crypto assets provide. AI is very dependent on that. These agents aren't going to be going and opening bank accounts and using their driver licenses and things like that. They need this sort of native internet infrastructure. And so crypto is going to benefit from that in the same way that it will benefit from the utility that AI is providing as it continues to grow. So we're seeing a strong intersection of those two things, and we do see this as a market that's probably going to accelerate much more in 2026 and create a lot of new opportunity for investors to get exposure to the assets that will benefit from this.
And finally, the most interesting part that I found based on your 2026 prediction was the primary beneficiaries, not to mention the implication for investors. But it does seem as though these smart contract platforms are set to be the primary beneficiaries. And as you mentioned, these TradFi institutions, including Bank of America, are starting to recommend crypto exposure for clients as we head into the new year. So what is Hashdex recommending for investors' portfolios?
Yeah, so right now we've in the past recommended somewhere between say 1 and 3% allocation. We're accelerating that and raising that allocation recommendation for most investors to between 5 and 10%. And a lot of this just has to do with the fact that the 60/40 portfolio is slowly dying. People are living longer for their retirement planning. They portfolios, and crypto fits very neatly within those structures. So that's one of the big things, especially as we've seen institutions like Bank of America and Morgan Stanley make allow for their customers to have up to a 4% allocation in these assets. These are things that just happened in recent weeks. Vanguard, who's historically been very skeptical about this asset class, is now allowing for the trading of these products on its platform. And so I think as you're seeing these traditional financial institutions come in and make allocation recommendations of called 4% or so, it really makes sense for people to take a more serious look at how crypto can benefit portfolios over
Okay,
time.
Gerry, I'm sorry to interrupt you, but we will have to leave it there for today. So thank you so much for joining me and have a happy holiday season.